And that is really the short-term scenario and the short-term challenge that most are currently facing.
Do you think countries are dealing with that well? Do you see a lot of asset bubbles forming because of managing all this capital? How concerned are you about it?
I think we have been very positive at the way that developing countries as a whole, and Asia in particular, has been responding to the latest crisis. I think they show significant amount of resilience. I remember in 2008, in November, October 2008, we were very concerned about the implications of the crisis for many of these countries. I think we were concerned the fact that this country may not be able to respond to the crisis, given the severity of the crisis. I mean, obviously there was a crisis not generated in the countries, but yet it impacted the population quite significantly. We were very, I would say, confident and encouraged to say how these countries could put in place the right macroeconomic, fiscal, monetary stimulus initially to get out of the crisis, but since March 2009, trying to normalize the policies. I think they have shown tremendous amount of skill in managing the short-term macroeconomic policy in a very turbulent time. And this has been the first time that we have seen many of countries being tested. Because remember, in the past, when you had the Latin American crisis, the Asian crisis, they were the epicenter of the crisis, and the rest of the world had to help them to get out. This time, this crisis was created somewhere else, but these countries could respond. And I think that is where the sign of optimism that the international community has accepted. And more than that, the markets have accepted. I think today the markets are operating under the scenario, the view that on the growth side, there's huge amount of growth potentials. On the policy side, these countries have proven that they can manage in difficult times. But again, the danger of the complacency should not be set. Because once you become complacent, then the problem will arise. The reason that we are so, again, going back to the same question of that, yes, they have proven that they can manage difficult conditions. They do have the long-term growth potential in terms of demographic dividend, in terms of the size, in terms of the population, but they do need to manage this next couple of years quite differently. And to answer your question, I think to what extent we saw that it can manage it. But the potential for asset bubbles is there. Because when you see so much capital coming in, and some of it are short in nature, some of it may be invested not in the right type of sectors, then inevitably they do create the condition for asset bubbles. But not necessarily asset bubbles, because the asset bubble is still depend on the policy responses that authorities have.
Tom, and then we'll go to Matt.
Thank you very much. Tom Holland with the South China Morning Post. If China's RMB is to become an international reserve currency, does that imply that China has to change from being an international net creditor to an international net borrower? And what does that mean for China's economy, for China's growth, and for international trade and investment flows, and also for exchange rates?
I thought that's an excellent question. I think when we talk about the international currency, there are several functions of international currency. It's one, that the currency will be used in trade transaction. The second one is in financial transaction, more, but the debt will be denominated. The third one is being used as international reserve currencies. And currencies actually today have this function in different scale. The dollar continues to be the dominant international reserve currency. The euro, interestingly enough, is ahead of dollar in terms of total debt denominated in euro. Now, renminbi obviously fall behind in everything like this. But the way that we are looking at the renminbi's gaining more global status is number one on the trade side, Number two, on the financial side, eventually, and we're talking about maybe 10, 15 years, that renminbi become an international reserve currency. And here the scale is important. I mean, today you have Japanese yen, sterling, even Swiss franc are still used as international reserve currencies too. Maybe 2 or 3% of world reserves are invested in that. But then to answer the question, it really depends on the scale. If 4 or 5% or even 10% of the international reserves will be denominated, invested in renminbi assets, it doesn't imply a significant change in the creditor status of China from being a major creditor to a status. It really, again, as I said, the way we are looking at the internationalization of renminbi is in phases and in different functions. The different functions don't have to move in parallel. They come in sequences.
Let's start in the back with the glasses.
Hello, I'm Connie from RTHK. And you have mentioned about renminbi will become more and more important in long term. So what do you think about the appreciation level this year? And because of the inflation in China, so what do you think about Chinese government should do as monetary policy? And will the inflation affect the renminbi appreciation trend and export in long term?
I think on inflation in China, as in many other Asian countries, some extent in the Middle East, and some extent in Latin America, there's a global component to that, which is related to the whole commodity. Oil prices going up so much in the past couple of years. Food prices becoming very important increase. That is the global point. For different countries of varying degrees, there may be some national component to inflation, which is really high growth scenario overheating in some countries. With respect to the China monetary policy, I think they have been doing the right thing. They have been tightening monetary policy through using the reserves and the capital bank increasing the reserve in the banking sector. And this has been going on for a number of years and may continue for a few more months and so on, depending on how the whole inflation scenario will change. But again, I think in terms of the renminbi, because it's still not fully floating, it's very much managed. And actually, the type of changes that have been put in place, again, has been very pragmatic. During the crisis period, the authorities fixed the exchange rate, pegged it to dollar, because of the uncertainty of the crisis. But of June of last year, they started widening the band. The renminbi can change gradually now. But looking forward, I think with this scenario of internationalization, the exchange rate becomes a function of the pace that they move in internationalization. The exchange rate policy then becomes subordinate to the broader policy internationalization, which is actually positive because it takes attention from the exchange rate as the only issue. Again, that's one of the advantages of looking at the global scenario from the long-term point of view, is that it puts attention where it should be. Some of the current issues become actually secondary to the larger picture that you look at. The way that they may move to the international renminbi, as I said, the pace at which they could move in terms of giving more flexibility to the renminbi or even convertibility becomes a function of how fast or how rapidly they would wish to move in internationalization.
There's a few more over here.
Yes, hi. I was just wondering if you could comment a bit on India, which tends to get a little bit less attention than China. However, given the size of the country and the prospect, do you feel it could catch up economically, and therefore what would be the implications for its currency?
Well, I mean, India is one of the 6 countries that we basically highlight as becoming important driver growth. India's size and its very rapid pace of growth over the past over 10 years. I mean, we did over 8% growth rate, and now talking about even 9% maybe possible. And I think what is really important in India, it's getting enough attention. It's getting attention in terms of foreign investment. FDI, which India has been increasing quite significantly. Many years ago, the whole FDI in India was about $2 billion, compared to China at that time was 40, 60, $8 billion. But there is a kind of catching up on FDI. There has been significant amount of reform of the corporate sector. Many of the Indians' corporations today are becoming important global players, both in terms of innovation in technology, to promote the M&A, in greenfield investment, and interesting enough, not just in the region, but in Africa, in Latin America, and in other countries. Then I think, in the report, India gets quite a lot of attention. In terms of the currencies, we don't see yet any policy announcement by the authorities in the moving to internationalization rupee. I don't think this is the policy at the moment, but looking the next 5 or 6 years, things could change. Right now, I think they're much more concerned about obviously making sure that the growth momentum continue, because they do need high rate of growth to address some of the existing imbalances domestically. They do need growth for reducing poverty. They do need growth to address infrastructure bottlenecks. And they do need growth for giving the opportunity to the middle class to become an important source of growth. But in terms of the monetary policy, the RBI has been very prudential. I mean, they're taking the attention, they've been tightening it over the past couple of years quite considerably, because they're concerned about inflation, as other countries they are. Therefore, I think in the monetary policy, they've been taking the right action at the right time. And we do get attention from that point of view. And they've been getting attention, as I said, on the corporate estate, on the corporate space, and getting quite a lot of attention.
Nadia?
I have one more question regarding the multi-currency regime. You mentioned there were other periods in history when we had 3 or more currencies used at the same time. However, these periods do not seem to have been very stable. Is that a systemic issue? So do you expect eventually to fall one of the 3 currencies behind? Or do you see them to be equally important for the time to come?
That's correct. I think, I mean, they haven't been, well, I mean, they have served their purpose at the time. I mean, in the 1930s, the 3 currencies, 1980s, again, 3 currencies. At the end of the century, currencies, these are the ones that are dominant currency at the center of the system, but you have always had other currencies that have served as international currency on different roles and different degrees. I think here the concept of stability really a lot depends on 2 things. What framework we have for international policy coordination. In the 1980s, when you had the Deutsche Mark, the British pound, and the Japanese yen, and the US dollars, the basic framework was G7. Today, when you look at renminbi, the basic framework and the forum and the mechanism for international policy coordination increasingly become G20. And G20 is much more representative of the world economy than G7. Today, G20, if you look at the G20 member countries, they account for almost 90% of the global GDP, 80% of the world trade, and 2/3 of world population. And that's why I think the concept of stability that we do receive in the 3 currencies, maybe more stable, is really dependent because the forum for policy coordination, whether on the monetary side or the broader macroeconomic policies, is quite different than what we had in the past. In the 1930s, the mechanism of international policy coordination was tripartite stabilization agreement. It was a kind of very loose set of agreement between the United States, France, and at the time United Kingdom. And they had some agreements that they would come to each other help if any currency would come at that time. And that provided certain mechanism or framework. But by 1936, that actually was broken and they didn't last. And you're right, they didn't prove to be stable. But you're looking at a different world environment with different players, different countries becoming global growth drivers. And the whole mechanism of international policy coordination is also changing at the same time.
I'm Kenji Kawase from Nikkei, Japanese newspaper. And I have a question about, you mentioned about the emerging market companies, corporations in the emerging market are gaining influence. And when you look at China, though, a lot of the players who are involved in, let's say, international cross-border M&As are nationally owned or run by government. It's not purely private companies. Unlike some of the other companies that are already developed or in the development phase. Do you see this as a problem in the future where we have they are funded by, a lot of them are getting enough credit and funding in China from government-sponsored banks or government-influenced banks? And also, the export of China is mostly driven by Taiwanese companies or multinational companies in China. Would you please comment on this aspect?
I think you are right. I mean, when we look at these companies in developing countries, we actually see a mix of both purely private, and when we see some more quasi-public and some more public companies. And in China, obviously, you see more of public companies than private companies. In India, you see more private companies. In Brazil, they're private companies. In South Africa, they're private companies. And to some extent, again, it reflects the fact that using public companies in China to undertake overseas investment is one vehicle of managing the huge amount of reserves. And again, that itself is a consequence of the fact that China's currency has not played an important international role. You have a disparity between the size of China's economy, China trade, and its currency. And again, part of the fact that we see it really become an international currency would address some of this disparity, would address some of these imbalances, and as a whole would be positive, both for China and for world economy. But again, as I said, the fact that you see a large number of public Chinese companies becoming important global players, global investors, whether in Africa, Latin America, or other Asian countries, is partly because of this is a vehicle of using that companies as a way of investing huge amounts of reserves. But that would change with the international development by definition.
In the back?
Yes, I would like to ask, in the coming that in America the QE2 will be ending, so what would you foresee the US currency, the trend, how would it become? And some people say that there might be a double dip in America, and how would you look into that? Thank you.
Well, I think in terms of QE2 ending, I mean, this is already been announced by the Federal Reserve Chairman, and by end of June they would stop QE2. When I say stop QE2, basically mean not purchasing treasury. That is from November 2002. I mean, and they've been buying close to $1.5 billion of treasury every month. This is almost one half of the total treasury issue. It's very significant. I think the talk is that that phase of the QE2 will be coming to an end. That's it. But the statement, I mean, the scale that I showed, the significant increase in the balance sheet of the Federal Reserve and other central banks is really the consequence of the crisis. We cannot see, we should not look at this though without looking at them, they were part of the response to the crisis. And I think at that time, we can go back to November, October 2008. At that time, taking a very strong fiscal stimulus, very expansionary monetary policy, not just in the Federal Reserve, well coordinated. They were the right policy actions to be taken at the depths of the crisis. People very quickly forget how difficult, how severe the crisis was, and how wisely many of these policies were taken at that time that got us through that. Therefore, it's going to take some time to normalize the significant amount of monetary stimulus that has been put in the market. But they were for good reasons, for good cause. And I've given this talk, I remember, people very quickly forget October and November 2008. Some of us maybe were there because we were looking at this situation on a daily basis, and we were very seriously concerned. And I think the international community proved that when there's a face major global crisis, they can coordinate. They can coordinate on changing monetary policy. The bigger question that one has to ask is that do we have the right framework, the right attitude, that we can have enough policy coordination in the normal times, that not just during the crisis. And I think that's part of the issue that we are trying to raise.
Just a quick question. Do you see the renminbi as a threat to the US dollar? And also markets across the globe has actually dropped and fallen recently. Is it another sign of an economic crisis? Thank you.
No, I don't think we see the renminbi as a threat. As I said, when we're talking about the dollar losing some of its relative importance, it's relative to what has been in the past. The dollar would continue to be a major reserve currency, a major international currency. And the renminbi actually gaining global status doesn't necessarily mean that dollar will suffer. As I said, historically, we have had episodes, times, that 3-4 currencies have served as international currencies. And again, overall, I think the global international renminbi is positive because it could help to address some of the imbalances that we are facing today. Imbalances on trade side, imbalances on the financial side. Therefore, from that point of view, we don't see that as a threat to the US dollar.
Robin Fox, I'm an associate. When do you expect the renminbi to become fully convertible in the capital account?
I think that's a question that the Chinese authority would come up with. We don't have any prediction of that at this time. But looking in the next 10, 15 years as a part of this scenario is internationalization, then convertibility will be part of that scenario.
Any more questions? One more here.
I just have a quick follow-up about the inflation problem in emerging markets. Is some commentators think that the monetary tightening is not directly resolving the problem, the inflation problem caused by food and fuel price. Do you think there is a risk of stagflation in emerging markets? Thank you.
I think, as I said, part of the inflation is global. There have been global components to that because of the, booming commodity price, what we have seen in the oil market over the past couple of months. And it looks like this is going to continue given the political development in the Middle East. And at the national level, again, there are different factors that contribute to inflation. Again, here, history is very good. I've been observing the international for almost 30 years. I remember in the 1980s, 1970s, inflation of over 20%. Latin America, God knows, hyperinflation. You're talking about 1,000%, 100% per month. Countries manage that. The inflation that we're talking about today was 7.5%. It's quite high because of the global scenario we're looking today. But they're not significantly high when you go back historically. Again, we forget that we are now moving in an environment that inflation as a whole has been addressed. There was a lot of concern in the 80s with inflation, hyperinflation, and stagflation. I think the credit should be given to major central banks and the way they have addressed inflation. Look at the countries like Turkey inflation was a major endemic problem. Today it's been brought under control. Latin American countries, even some of the Asian countries, Middle East countries. I mean, this state long-term historical background, this is always, again, good to remember. But to what extent monetary policy could address this one is, I think, for the time being, is the right policy. Because fiscal policy in some of these countries is already some rules. And it makes sense to keep some space on the fiscal side because the uncertainty, the global recovery. If the global growth slows down more than what we expect, then it makes sense that policymakers to have more ability to use the fiscal policy to strengthen the growth. I think, therefore, the inflation is becoming more an issue, partly because we are seeing some moderation of growth. But if the growth had continued at its pace of 2010, I think it would have been much easier to have this situation.
One final question.
So, you didn't talk about gold in your multi-currency system. How does the gold is supplementing with the emerging new currencies? And many people, if you have sharp currencies, they're looking for gold.
I think we have moved away from a commodity-based international currencies. I mean, it's all this history, and I don't see that actually, moving forward, that gold or any other kind of metallic currencies could serve as international currency. I mean, gold is always being used as a hedge against inflation. I mean, that's fine. That's the reason that we see gold prices behaving the way they have done. But as an international currency, we don't see that having much importance.
We'll leave it on that note. Mr. DAILAMI, thanks very much for coming to Hong Kong. A small gift from the Foreign Correspondents Club for you joining us today. Let me stand up and get it.